Hello, everybody on the webinar. Hey, what's up, everybody on Facebook? Hello, everybody on Instagram. And if this recording is good enough, hello, everybody on YouTube. My name is Richelle Dickerson, and I am the giddy, excited, honest, hardworking, and passionate CEO of a financial firm named Rhema, RHEMA, Financial Solutions. If you want to find out more about our firm, write this down. Go to Rhema Financial Solutions.net, and you can find out a little bit more about our firm. Now, listen, I do wear glasses, so let me put my glasses on and see who is here on tonight. What's up, Desmond? I see you there. What's up, Mike? Hello, hello. Feel free to tap hello in the chat. Who is live on Facebook? I already see John. What's up there? What's up, Karen? What's up, Pastor G? I see you there on Facebook. Welcome, everybody. We just started streaming live, so I know that more of you are going to be chiming in. Those of you who are on the webinar, if I recognize your name, guess what? At the end of the webinar, I may just let you in to ask a question of me. But listen, how many of you are here because you heard about the concept of being your own bank? And you were wondering, what in the world is that? It's such an intriguing title. Type a 1 in the chat if you wanted to know what it means to be your own bank. What does it mean, right? So that's where we started. And then you're like, okay, being my own bank, I can get with that. Banks make a lot of money using other people's money. We know that. So how do you create a retirement bank? What in the world is that? Well, we know that when you're retired, that means you have a passive income, meaning you no longer have to work and your money has created a lifetime pension or an income for you, right? But listen, I learned something. You don't have to be old to have a retirement income. One of my favorite examples is Simone Biles. Isn't her name Biles? The gold medal Olympia, the GOAT. She retired at age 26 on passive income. She's at $16 million in passive income at age 26. How does she do it? Applying the principles of ownership and being her own bank at a young age. I can happily say that I live on a passive income, which means I don't have to work and there is cash flow coming in. It hasn't always been that way, right? But I can honestly say that I have an ownership of a business that's creating cash flow for me. Makes sense? But there's two ways that you can do it. So we want to talk a little bit about that, right? And we want to make sure you understand that there are 3 power moves that everyone must take in order to become your own bank. Is that good enough? All right. So before we get started, you probably say, well, who are you? And what makes you an authority to do this, right? Listen, I've been in the financial industry since 1992, but I quit several times. As a matter of fact, I quit for about 8 years. And then the pandemic hit. I was a fitness instructor and I taught seniors exercise rehabilitation. And when the pandemic hit, as you know, everything shut down. My 401k dried up. My son and I were living in an apartment, and we found ourselves in the middle of the pandemic, door dashing, trying to make ends meet. I was behind in my car note and they were about to snatch my car. And my 12-year-old son and I were knocking on doors with gloves and masks, trying to drop people's lunch at their door and get away because people were dropping dead in the middle of the pandemic. Things got so bad, I swallowed my pride. And I went on Facebook and I did a post. Please help me and my son. Has it ever been so bad for you where you dropped your pride, where you would actually go on social media and beg for help? That's how bad it was for me. And guess what happened? A friend of mine on the dance ministry from church, because I'm a praise dancer, said, Richelle, I have something for you. I think that it could help you and Solomon. And she shared this business with me. And I was like, Lord, I hate financial services. You have got to be kidding. It kicked me in the behind. I know you don't want me to go back into financial services. So if you want me to go back, you're going to have to give me a sign. And do you know what I believe the Spirit of the Lord said to me? He said, name your business Rhema. And I was like, what? Because I knew that the word Rhema meant his spoken word, and it's the highest level of integrity. The creator of the universe can't speak a lie, right? If the creator of the universe speaks, it's going to happen. There's no such thing as a lie. So I said, and I looked it, I Googled it, I said, Rhema, and I couldn't find anything but the Bible college that was named Rhema. So I knew the name was clear. Then he said, go talk to millionaires. And I was like, you got to be kidding me. You know it's God when it's ridiculous. Go talk to millionaires. I'm like, Lord, you want me to go back to my friends from the 90s who are still in this business? They're multimillionaires. What do you want me to do? Get off the bus and go knock on their door? Can anybody relate to that? Anybody ever been on the bus on welfare and said, God, you got to be kidding me. I'm not going, they're going to laugh me out of here. Long story short, I followed those instructions. Some of my friends at 8 figures, 7 figures, laughed me out of their house. They hung up on me. They cursed me out, but I kept going. And some of them got into business with me because they never heard the concept of being your own bank. Multimillionaires in life insurance and investments, and they were just selling final expense and temporary policies. So they're like, Richelle, what is this be your own bank concept that you're doing? Long story short, several 6-figure and 7-figure and even 1 8-figure business partners came into the industry with me in July of 2020. I had 15 people the day before I got my license. By the end of the year, I had over 30, pushing up on 40 people in my organization. I earned my 6-figure ring, easy peasy. But then March of 2020, I dropped dead. At least I thought I was dead on my couch in my government subsidized apartment. I began to black out. And then my lungs burned. And I said, oh God, I think I have COVID. And my last thought was, what's going to happen to my son? Who's going to take care of him? I woke up that Friday morning and there was $2,000 sitting in my bank account. And I was like, I didn't write a policy. I didn't do anything. Why is there $2,000? And then I tried to get on Zoom calls, but I couldn't because my body was so beat up by COVID. But then the next Friday, another $2,000, and it was greater. And then it happened again and again and again. March of 2021, I didn't write one life insurance policy, but $2,000 kept coming into my account. And I said, oh my Lord, this works. My business was paying me a passive income without me writing anything. That is when the idea woke up to me that we all need to learn the concepts of being your own bank. Now I have investments that pay me a passive income and a business that pays me a passive income. And I want to admonish you that you do not have to be 65 years old. All you have to do is know where to put your money so that it grows, and practice the principles of being your own bank. Sound good? So that's who I am. Now, listen, without further ado, I am going to share my screen. Now, I'm going to skip past Mr. Robert Kiyosaki. Okay. He talks about being your own bank. He has one of the best books, by the way, called The Cash Flow Quadrant. He says that there's 4 ways to create an income. You can create an income by working your behind off for somebody else on a job. You can create an income by being self-employed and working your behind off, and you have a business, but the business owns you, which means you are a slave to your business. You cannot walk away and it produces passive income. He also says that you can be a business owner. And when you have a business, it's like a toll booth. Everybody that passes through rings your cash register and you're not there. You have a business system that cranks out passive income. You with me? Robert said the 4th way is to be an investor. That's where you have investments that are cranking out passive income. In other words, what is it? Y'all know, money making money babies. I want to submit to you that every dollar that you earn should be making money babies. Tip number 1, if you have money sitting in your pocket, or if you have money sitting in the bank and it's not making money babies for you, take it out and put it in a place that grows by at least 4% minimum. There are high yield savings accounts and credit unions with no fees where you can put your money and it is going to grow at a minimum of 4%. All right. So welcome, everybody. I told you my story. We are affiliated with a company called Your Family Bank. This is the organization that created the algorithm that teaches you how to take a life insurance policy and create cash flow. It teaches you how to take a life insurance policy and eliminate your debt using the life insurance company's money while your money keeps sitting there and growing. It teaches you how to invest in real estate so that you can get a loan from the bank on a piece of property and use the life insurance company's money to pay off the bank. Woo! If you are an agent and your company is not teaching you the principles of how to be your own bank, You are being shortchanged. You need to reach out to me at Rama Financial Coaching at gmail.com or message me and say, hey, Richelle, I want to go to that Be Your Own Bank boot camp that your organization has. After you come out of that boot camp, your entire mind will change. You are going to have a financial consciousness that you cannot have any other way. All right. Here are some of the companies that we are associated with. If you take a look at these companies, you will notice that they are all over 100 years old. If you Google them, you will find that they are all A-rated or A+ rated with AM Best and Standard & Poor's, which means they have excellent customer service and they have multiple billions of dollars in surplus cash, and they pay their claims and they pay their people on time. You will see that there are a combination of life insurance and investment companies. Only pick top-rated A companies. If you have a life insurance policy or some type of an investment account, don't go with Joe Blow B-rated company that's less than 100 years old. Why? Because they can go belly up and not be able to pay their claims, and they will give you a hard time when it's time for you to get your money. And I know, because like I said, I've been in the industry since 1992. Guess what, people on Facebook? Jeff, guess what? Desmond, guess what? Nothing is for sale on this webinar. You can't buy anything, and nothing is for sale. We are financial coaches, financial planners. That means we are looking for relationships, long-term relationships. Most financial advisors do charge you a fee. They charge anywhere between $500 and $20,000 to teach you the stock market, help you get out of debt, etc. But guess what? We don't charge advisor fees. So how do you make money? Referrals. So if you decide that you want to talk with me after this Zoom call in exchange for a relationship with me, we ask you for referrals. Who do you know that I should know? So before we come back and show you the money, we're going to ask you to write down at least 10 names and numbers of good people that you know. After you've done that, whether you're able to invest or not, whether you're able to be your own bank, doesn't matter. As long as you speak good about us and give us referrals, you are in a fiduciary relationship. Now, let me tell you something. And I'm not bragging. God gets the glory. Do you hear what I'm saying? God gets the glory. But my hours are worth a minimum of $7,000 to as much as $30,000 per hour. So if I'm in a one-on-one relationship with you and you call up and say, hey, Richelle, my 401k is losing money, what do I do? And I give you instructions. I have seen my clients earn $100,000, $200,000, $30,000, $10,000 by just doing immediately exactly what I say. So being in a relationship with me is worth hundreds of thousands of dollars that you may not be able to pay. And all we ask for in exchange is referrals. Simple. Why do you do that, Richelle? Because I grew up in a neighborhood where we were denied financial education. We should have been taught these things in high school and definitely in college, but financial literacy is hidden. You have to pay for it. It's hidden from certain people. And I don't believe that's right. It took me 50 years, in 30 years in the insurance and investment industry. And all that time, certain groups of people were being their own bank. And we were segregated away from that because of financial segregation. So, because of financial segregation, I am very passionate about getting this information to as many people as we can. So, again, if you're on Facebook, Instagram, all I'm asking you to do is hit the like button, share the video, tell somebody, and eventually, God gives the increase. Amen. So now I have a question for you, Desmond and Jeff and John. Do you have a retirement account? Do you? Do you have one? If you do have one, have you noticed holes in it, which means money's leaking out of it? The first hole that leaks out of everybody's savings is taxes. The federal government has implemented a tax hike that will hit us January of 2025. Between incomes 44 to $100,000 a year, your federal taxes are going from 22% to 25%. So that means off the top of your income, 25% of your income belongs to Uncle Sam. State taxes run between 3 and 13%. So between federal and state income taxes, as of January 2025, the entire country will be paying an average of 30% of our working income back to Uncle Sam in taxes. Why? The pandemic, all the stimulus checks. The government actually started printing money to boost the economy. Come on, that's called, what's when you print money, what is that called? Counterfeiting. Oh, it's counterfeiting. Okay. So the government started printing money. It doesn't have gold in it to stimulate the economy. Inflation went way up because of what was happening. So now they're trying to pay back this trillion dollar debt. Well, Trump knows about money. Well, guess what? It's impossible to pay back $5 trillion without taxing somebody. Okay, do you pick up what I'm laying down? So it is impossible for taxes to do anything but go up. So taxes are going to smack our behinds really, really hard come January. The next thing is, if you have a retirement account, some joker is taking commission. It's called fees. Most retirement accounts charge a 1% fee on your account for the rest of your life. You mean to tell me that one and done joker that sold me a mutual fund is going to be getting paid 1 to 2% of everything in my account until the day I drop dead? Yes. Okay. Fees. The other thing is low growth. Inflation runs between 5% and 8%. What does that mean? That means if you go buy a drink at Kentucky Fried Chicken and the drink costs $1, next summer, this same drink is going to cost how much? $1.05. That's inflation. So if your money is sitting in the bank and it's not growing by at least 5%, your money is sitting there and depreciating in value. That's huge. The next hole in the bucket is a hole called the stock market crashing. Did you know that the stock market crashed over 5 times during the pandemic? I had people calling me say, I lost $100,000, $90,000 in my thrift savings plan, $100,000 in my 401k. I had a lady just last week who, a Norfolk teacher, we watched her 403b. She left it behind because she didn't know what to do with it. So she had let it sit there for 5 years. It had been sitting there. And when we were trying to roll it over, we watched it decrease in value by $1,000 a day. By the time we were able to roll it over in 5 days, she lost over $4,600. And some people say, oh, well, Richelle, that's the nature of the beast, right? What goes up must come down. If you're going to be an investor, you can't be scared of that. But I want to ask you a question. If you made $60,000 a year working your behind off, and you lost $60,000 in your 401k, how long would it take you to put back that money and just break even? Well, if all you're doing is putting in 5% of your income and you make $60,000 a year, it's going to take you 10 years just to break even. You're taking 5 steps forward to take 7 steps backward because you don't make enough money to recover. Drop the mic. Process that. Process that with your financially literate mind. There are 3 banking systems, and I'm going to go quick because this is so valuable that I'm just going to go quick. There are 3 banking systems. There is the bank that you go to, PNC, Citibank, Navy Federal. There's your job and the IRS, which are in bed together. It's called your 401k, 403b, 457. The 400 is a tax code. Rich people don't put their money there. I'm not going to go there, but 400 is a tax code so that you can write off what you're putting into it so that at the end of the year, you get a refund check. But it's like peeing in the bed because sooner or later, you're going to have to clean it up. Sooner or later, you're going to have to pay back the IRS everything that you didn't pay taxes on. The third banking system is private industry companies, private life insurance companies, and private investment companies. The first two banks and your job in the IRS are considered public banking. The last two, life insurance companies and investment companies, are considered private banking. Listen, your bank has taxable savings. And how much are you going to have to pay in taxes, Jeff? How much you going to pay? Jeff, if you're on here and you're an agent, you better be typing in that chat. You can't be eating from my plate and not giving back. You hear me? So, how much do you have to pay in taxes, Jeff? 30%. 30. So, if you have a CD and it's only paying 3%, and they send you a 1099 at the end of the year and you have to pay back 30% in taxes, how much did you earn? Negative 24%. So your money depreciated in value by negative 24% because you had to pay taxes. Banks don't pay enough interest. Banks are called public banking systems, which means that if you ever get in trouble, a judge, federal or state, can lock that money up. The money in the bank goes through probate when you die, which means there'll be 40% that the government will take back, called death taxes. Tip number one, money growing in the bank decreases in value because of inflation and taxes. Don't keep more than 6 months worth of savings in the bank, and make sure it is a bank that is paying you a minimum of 4% with no service fees. Go Google it. The second bucket is your employer in alignment with the IRS. On this bucket, you will pay a minimum of 30% taxes. And if you try to touch the money before you're 59 and a half years old, the government will assess an extra 10% on top of the 30%, which will make it 4%. There are also management fees, commission fees, rollover fees, transfer fees, and stock market crashes. So if you're already losing 30 to 40% in taxes and fees, and then the stock market crashes, how much money do you have left? Tip number one, only keep your matching money. Matching money is free money. So don't do any more than your matching. Everything over your matching must be diversified. And if your company doesn't match your money, I suggest you give me a call or shoot me a message and take a look at something in the private banking system. When you look in the private banking system, you want to look at a Roth, a fixed indexed Roth IRA, or a high cash value life insurance policy that you can turn into a passive income. When your money is coming out of a Roth or your money is coming from a life insurance policy, you will pay no federal taxes, no state taxes, no capital gains taxes, and no Social Security or FICA taxes. Why? Because you're liquidating a death benefit. And liquidating a death benefit is under the of it is under the 7702A tax code. Look it up for tax free. All right. What is the downside? There are early out surrender charges in these accounts, but they normally last less than 10 years, and they're never anymore. I said they're never anymore. It's never any more than 10%. Think about this. You have a Roth IRA. Okay. A fixed index Roth IRA, because you're going to follow my advice. And you're going to go in there early and take your money out. And the IRS would charge you 10% taxes for taking your money out. Which one is worse? 30 to 40% in the public banking system, which is your job or the bank, or 10%? How much do you want to pay in taxes? 40% or 10%? How much do you want to pay? I take the 10% all day. 10% is better. So you've already saved 30% you've already gotten back 30% of your money just by following this advice. All right. Tip number 2, learn to become your own bank. All right. Banks make money using other people's money. So Jeff, let's say I put $10,000 in the bank, and then you came behind me and took a $10,000 loan out. The bank would do what? They would check your credit. And if you had bad credit, they would charge you 15% interest on my $10,000. So the bank would go into my bank account and loan the money to you, and you'd pay back my $10,000 plus 15%. 15% is the bank's profit. So the interest that they're charging you on your loan is their profit. Banks can do this 10 times. So that means on my $10,000 deposit, they can loan it out to 10 different people and charge 10 different interest rates on one person's deposit. So the art of being your own bank is knowing how to take a loan and make money off of it. I submit to you that it is impossible to be wealthy unless you know how to borrow money and make money off of it. Shark Tank. That's all I'm going to say there. All right. So be your own bank. Learn how to use other people's money to make money. Create cash flow out of a loan. Creating passive income out of a loan. Loans are not taxable. Creating a stream of income out of a loan and then having it on a system that it automatically pays itself back. That is being your own bank. Tip number 3, I believe. We were programmed to go broke. We were programmed to put money in the bank, spend it all up, take our bank accounts down to the line of zero, work our behinds off, putting the money back in there, and do it over and over again. And we were also programmed to take our credit cards, max them out, then pay it back over and over again, consistently taking our bank accounts down to the line of zero. When you become your own bank, you always have several accounts that are out of sight, out of mind, that are self-funding, which means money goes into those accounts without you actively doing anything. And those accounts are always growing at a minimum of what? 4%. So you have your account over here that's separate where you pay your bills. And that account should be earning interest too. No dollar should be anywhere not earning interest. So your bank accounts, even your bill paying accounts, are earning interest. Then you've got several accounts over here. They're sitting there. And while you are asleep, they are making love and having babies. Every single day, your money is making love and having money babies. Out of sight, out of mind. That is the mindset. Now, I could charge you for that, especially if you just got an aha. That was excellent coaching. The power move number 1 is learning how to take a loan and make money out of it. I'm not going to go through that. If you want to know how we do it, you'll have to jump on a coaching call with me. Power move number 2 is taking that loan and creating cash flow out of it where it automatically pays itself back. And we have a system and an algorithm that shows you how to do that. Power move number 3 is this. Once you set up your cash flow account, which means this account is going to create passive income for you, power move number 3 is taking that account and putting it in a trust. The trust means it's out of the matrix. It's no longer on your social security number. It's out of the public banking system. You no longer own it, but you control it and you receive income from it. The secret sauce is a trust. Number 1, get out of debt if you're in debt, because if you're in debt, that's going to eat up your income. So get out of debt, eliminate the debt, bad debt. There's a difference. If you have debt you're making money from, that's good debt. If it's putting money in your pocket, that's good debt. If it's taking money out of your pocket and you're going broke, that's bad debt. So eliminate bad debt. If you don't have any bad debt, then learn how to borrow money and make money from it. Number 1 is debt elimination. Either you're in the investment side where you know how to go borrow money and make more money from it, or you're on the struggle bus. And that's okay. I was on the struggle bus. If you're on the struggle bus and you have a lot of debt, then you need to get rid of that debt. You will never become your own bank. As the Bible says, the debtor is slave to the lender. The debtor is slave to the lender when the debtor does not know how to make money with what they borrowed. Drop the mic. So step number 1, power move number 1, is knowing what to do with a loan, to get rid of it if it's bad, to keep it and make money from it from if it's good. Step number 1 is debt elimination. Step number 2 is when you get that pile of money, you create cash flow out of it. If you don't have a pile of money, you're funding a cash flow account, which means you want to start with a fixed index Roth IRA. If your income is under $200,000, you should be maxing that out at $667 a month. Max it out so that it creates cash flow. Don't be crazy and go to the bank and get a fixed, you can't get a fixed index Roth IRA from the bank. They're either going to put you on the stock market or they're going to give you a low interest rate. And they more than likely won't teach you how to create passive income out of the Roth at the bank. They're going to lose it on the market or they're not going to pay you enough interest. Talk to me, get a fixed Roth IRA, and I will show you how to create cash flow out of it. Create cash flow either by monthly funding something or taking that lump sum of money. If you have assets in your home, we can show you how to pull the equity out of your home and create cash flow. I'm not talking about a reverse mortgage. Talk to me about how to do that. Okay. Don't die and leave the equity in your home. The bank gets your equity, the bank gets your house, your kids and you get nothing. That is a loss, adding loss to loss. Don't do that. Okay. So create cash flow, get out of debt, create cash flow. Move number 3, once you've got your cash flow account, don't be crazy. Put everything in a trust and do it before January the 1st, 2025. Why? January the 1st, 2025, there's a new administration coming into office, and the past administration and the new administration both agree on this one thing. Taxes are going up to offset the money that was printed during the pandemic. All right, I'm done. What time is it? I did good time. All right. So from this point forward, I want to invite you. So what are the next steps? How do I create a cash flow account? Good question. Let me show you. Here is the next step. The next step is a secret sauce that we have. It's called the Be Your Own Bank green sheet. On this sheet, we're going to sit down with you for 30 minutes. We're going to find out what your goals are. Why did you book this call? Are you trying to eliminate debt? Are you a real estate investor and you want to use a life insurance company's money instead of the money you have in the bank? Are you trying to create cash flow? Are you losing money in your 401k, 403b? Do you have $100,000 sitting in a bank account growing at 1% interest? And your 100,000, you might as well be lighting a match to that cash, because your cash is decreasing in value faster than you can use the bathroom. Why are you on this call? Do you have assets that you don't even know you have that you can create cash flow with? Are you living paycheck to paycheck, or are you living comfortably? Do you have life insurance? And if you do, what kind of life insurance do you have? Is it temporary life insurance where the price is going to go up on you? Or is it, and it only gives you one benefit, which means you have to die before somebody gets money? Or is it cash value life insurance, but it's not paying you anything? What kind of life insurance do you have? Can we leverage the life insurance that you have? Are you healthy enough to get another policy that you can turn into cash flow? Because if you can get a life insurance policy and turn it into cash flow, you may not need to sock away $5,000 a month in order to meet your retirement goal in 10 years. We could leverage that death benefit, turn it into cash flow, and then you don't have to sock away so much money. But if you have health issues, if you have background issues, meaning DUIs and been to jail and smoking reefer in 2020 and all of that, then we have to find assets someplace else so that you can have cash flow. Are you living comfortably or are you living paycheck to paycheck? Because I'm going to tell you this one thing. Richelle Dickerson doesn't take everybody. I can't. We can't. In order to create cash flow, you need to be in a position to be able to set aside comfortably $300 a month. $300 a month. You need to be able to comfortably set that aside. If you cannot, then we have some more groundwork to do. In order to create decent cash flow, you need to have $100,000 in assets, either in a 401k, in your house, in equity. You need to have $100,000 in cash flow to create a retirement income that will last for the rest of your life. If you do not have $100,000 in assets somewhere and you are 55, I don't know whether I can help you. Maybe you can set aside $300 a month and get a little bit going. So I'm not saying that we can help you. But what I am saying here is text me. Text me. Don't book a call. I just want to talk to you on the phone before we book a call, because we need to find out where you are. My phone number is 240-467-7397. Text me and say, Richelle, I saw you be your own bank workshop. This is what I'm dealing with. I will call you. We will talk for 15 minutes. I can tell you whether you have the ability to become your own bank or not. And I can tell you what you need to do to go in the right direction. For 15 minutes on the phone with me. But before I point you in the right direction, I'm going to ask you for a referral. It's real simple. And don't give me cousin Tutu that don't got a job. A good referral. You understand what I'm saying? That's it. All right, listen, I've got another webinar at 8:00, so I have got to jump off of here. I pray that the information that I dropped into your spirit was good. Jeff and John, if you believe in what I'm teaching, drop a "that was good" in the chat. Hit the like button. Share the video. Don't be the kind of person who just takes and takes and takes and doesn't give back. There's a principle of decrease when you don't give back to those who have who blessed you. I love you, and I promise to see you at the top of being your own bank. See you next Thursday. Nope, next Thursday is Thanksgiving. I'll be eating turkey. Don't be a turkey, eat the turkey. All right. I love you guys. See you next time. Bye-bye.